Wall Street hates this about pretty much the entire AI space. And they specifically hate this about AI stocks, Micron, AMD, NVIDIA, Intel, SK Hynix, pretty much the entire list. And I'm going to explain this to you here in a minute. And this has really been crystallized by what happened with Google's earnings. I'm going to talk about that and paint the case. So give me a few minutes. I promise this is worth your time. This is a really interesting analogy. Please hit that subscribe, hit that like button because I got a lot of cool stuff to share with you. Okay, so right here, right now, let's just take a few of the AI stocks as an example. Micron right now is up 3%. AMD is down about 2.3%, and NVIDIA is down about 1.5%. So nothing major going on here as far as movement in the price action. But this is what I really wanted to talk about. AI is forcing big tech, Microsoft, Amazon, Google, you name it, right? Meta, to do something it's never done. Spend more than it earns, and Wall Street hates this. And this is something, guys, that I've been talking to you guys about for a long time. Now, stay with me because this is important because this goes to the heart of the cycle and the nature of owning AI stocks and what we're going to continue to see to play out. And this is really important. Okay, so what is it we're really talking about? Well, in Google's recent earnings, Google had an amazing quarter. Their Google Cloud computing business grew, I mean, just an astounding number. And it is apparent it's becoming the core of their business. But Google's free cash flow was negative. I believe it was just shy of $6 billion. What does that mean? This is the first time this has ever happened, is that Google's free cash, how much cash they're spinning off, was negative. And it was directly attributed to AI spend, to Google spending on their AI infrastructure and their AI cloud rollout, their compute rollout for AI. And that goes to the heart of what we're seeing play out. It goes to the very essence of what I've been talking to you guys about in a lot of videos, is that Wall Street wants valuations. They want earnings to go up. They want, they place valuations on these companies and price targets at certain levels because of how much the company is earnings, the forward-looking projections, all those things that we know, right? But the AI spend is completely turning that on its head. And quite frankly, Wall Street really doesn't know what to do with that, right? They don't really understand. Well, they do understand. They don't know what to do with it because it's something that we've never seen. It's unprecedented. 2 years ago, there was no AI spend. There wasn't hundreds and hundreds of billions of dollars being spent on AI compute build out. Just like, Google raised theirs from about 185 to north of 205 billion is what they're going to spend in this year. And therein lies the interesting fact. Okay, so it's interesting if you see this. Okay. So stripping out, Google had an excellent quarter. Its cloud computing business core grew 82%. That's the Google Cloud platform I just showed you. And that is becoming the heart of their business. But investors punished it, dropping it nearly 7+%, right? But because it was the first time I mentioned earlier, is that the company became free cash flow negative. It means that less cash entered the company than left. Think about that. Management also warned that in 2027 capital expenditures would be significantly higher, further deepening anxiety on the street. And therein lies what you really need to understand. That's how and why this is so important, okay, is that Wall Street hates this about the entire AI trade because they don't like that this is playing out. Free cash flow. They don't like all of the spend that's going on. That's why they're constantly worried about, CapEx expenditures and are they going to be reduced? Are they going to be increased? That drives them crazy. And it also drives them crazy in the context of like that money is flowing to obviously any company pretty much associated with AI compute build out. Micron, SK Hynix, NVIDIA, AMD, Intel, CoreWeave, Nebius, and Power, Bloom Energy, and Corning for fiber optic cabling and all of that kind of stuff, right? Therein lies the issue. Is on one hand, it's making sense for a lot of companies because they're the ones that are getting paid, the picks and the shovels, if you will, right? To use that analogy. but we all know it's the hyperscalers that they're really funding this. And ultimately it comes back to valuations, and it comes back to, yes, these companies are spending ultimately they will have spent trillions combined on the AI compute space, the build out. But Wall Street wants companies to be profitable. And as stockholders in those companies, we want them to be profitable. Like, I own Microsoft, I own some Meta, I own some Amazon and Alphabet, right? And I, as a stockholder of those respective companies, what do I want? I want those companies to be profitable. But that's what's driving everybody crazy is think about Google again, free cash flow. Okay. It also goes deeper than this. If you kind of dig into it, this is again more reason that the Wall Street hates the AI space in general, if you will, is continuing with Google. The company's latest filing shows $800 billion in purchase commitments and other obligations, and an eye-popping number that reveals sneakier expenses like $51 billion spent backstopping other companies' data centers. This is money that's being pledged, and it's there either being spent or going to be spent backstopping other companies' data centers. Think about that. There's a circle here of all of these companies that are propping each other up, if you will, because a data center, a lot of these data centers is not just for, say, Google. There's compute time that's being bought by essentially competitors, and competitors are essentially, in some instances, propping each other up, backstopping each other up. Another thing, and I've been talking about this, at least 6 firms cut their price targets for Alphabet in response to Alphabet Google's earnings. Piper Sandler, UBS, DA Davidson, they all had it north of 350 or 350, 379, 395. And then we saw, what happened is that this spread, because we all know that Microsoft, Amazon, they're all going to come out with eye-popping numbers as well as far as their AI expenditures. And everybody's freaking about free cash flow, but getting insight to how this money's being spent. And ultimately, it comes back to valuations. Ultimately, it comes back to, we as stockholders in those respective companies, we want them to be profitable. But we also are requiring them to build that AI compute build out, right? We want them to do that because there is no company in this mix that can be seen as a loser or be seen as not being proactive and spending on AI build. What does that mean? It means that we're contradictory in what we want, expect, but then also require for stockholders and valuations of that respective companies. You see, it's starting to become kind of crazy. And then as stockholders in Micron or AMD or NVIDIA, what do we want? We want them to be profitable too. We want that money to be spent. So you start to see the contradiction here and this flow of how all of this is kind of crazy. If you think about it, truly, it's nuts. But it's part of it, right? I mean, this compute infrastructure build out is and has to happen. And Google's already giving us insight into how that's going to be so dramatically profitable for them with their Google compute business now 82% growth and just continuing to grow and grow and grow. It is interesting. It is interesting. And Microsoft, Amazon, Alphabet, they all will, in the purple, they all will profit dramatically from supplying AI compute to retail customers, you and I, to companies, to governments, and all of those kind of things over the years. But that AI compute has to be paid for. It has to be built, and that's what we're in right now. And that's what Wall Street hates about it. For everything I've just mentioned to you, it is this situation that we have never ever seen before from an investment scenario. On one hand, we are requiring the companies to pay for and build out this AI compute infrastructure, but then we're punishing them on one hand. And then on the other hand, the third hand, we're saying you have to do this because we don't want you to be not responsive and not build this AI compute. So we're it's all these contradictory scenarios playing out. It's really, really quite amazing if you think about it and how this is all coming. So where does this leave us? It leaves us in this place where we're in a no man's land of where Wall Street hates essentially AI stocks on one hand, but they love them on the other, where Wall Street wants to have the traditional valuation model in place for that it's had forever, which we want that and we need that. But it also, in this valuation model, where free cash flow, as an example for Google, is the first time, because it's an AI build out, we're going to punish them for that. But yet Google, you have to continue to spend those monies to build out that AI compute platform. And oh, by the way, the same thing applies to everything else. And this is more than just the hyperscalers. It's pervasive. We're seeing it across the board. Like Google, Ford and General Motors and other major companies, they have to build out their AI compute platforms respectively for their businesses as well. And that costs a lot of money. And in some instances, that impacts cash flow, that impacts current earnings, that impacts future forward-looking statements in what those respective companies are spending. Okay. It all is tied together. Okay. So, hey, before I let you go, I want to share this with you real quickly. There's a link down in the description below. I've started doing a lot of trading over at BTCC, and I'm actually going to be starting a private group here in the very near future. But if you want to get in early and get into this, there's a link down in the description below for BTCC where you can join me over there. It's free to create an account. This is an exchange, okay? And you can get access to any crypto and or stock you want. You can unlock some significant rewards. I know this says start your crypto journey, but it does apply to stocks as well. And this is a exchange I've been using a long time. I'm opening long and sometimes even short positions. And you see, like right here with Micron, you see how this is moved down on this Micron stock in this green line. That means that it's perfect. It's perfect right now for a short. Excuse me, I apologize for a long. Sorry, it's been a long day. I'm not caffeinated. I'm right here. I'm already up, and I'm still like, whoa. Okay, it's presenting itself for a great, really quick long position. You see how it's bouncing this green. And by the way, this is an indicator you only get if you click on and sign up through my link. Okay, this is an indicator right here that is, see this orange. This if Micron's going the other way, it would present an opportunity for a real quick little short that you can make money off of. But right now, I'm actually going to open up a long position here in a few minutes and open up a long and just basically see where it's moving up, and then it's going to bounce and move up. Okay, so it's presenting on a long position. That's what the indicator that is a private indicator that only my people who sign up under me can use. It's right here. It's bouncing off the screen. That's what's really cool about this. And by the way, this is free. To use this is free. Okay. And by the way, what's cool with BTCC is you can open up with leverage. So like right here, you could have it at 4x. I mean, obviously I don't do any more than 4x, guys. Okay. So 4x leverage. And then, if you make, say, 10% profit on a trade, 10 times 4, you really make, instead of 10%, you make 40%. Okay. That's what's cool about leverage. Okay. If done correctly. So I am starting a private group here in the very near future where I'm going to be sharing all my trades, but you can get in on this now if you want. Links are right down there below this video. I'll even put it in the, link in the comments as well. And you can sign up for free and get into this. But this is what's really cool about it. This indicator that's showing you these lines and how this green line, this resistance line, where it's bouncing off of, and see Micron right now is presenting a perfect opportunity for a long to do some really quick trading and make some significant money. And that's right there free, what you're saying. Okay. If you sign up through my link right down there. Okay. So get in on that. Okay. And you also get some significant welcome rewards and all of that kind of stuff. But we got some crazy stuff going on in the market right now. Yeah, I think we're going to continue to see some good stuff. Okay, so get that link down there. Sign up. It's free to do it. Free. Okay, and then you can get into my trading group later when I'm launching. I'm putting some final touches on it. And by the way, it's going to be free as well to get into that. So links right down there to get into the exchange. And then I'm going to be sharing all my trades will be on this exchange, BTCC, and you'll be able to follow along. And also, a little side note. I'm having BTCC build me a trading bot as well, and you'll get access to that, and that will be free if you use that link right down there that takes you to this page you see on the screen. All right, I'll see you.